Okay, great. So webinar 2, as I mentioned, thank you for joining us. I'll go back one. So as mentioned, please type your name, organization, and where you are joining in the chat box so we can get to know you a little bit. And other quick notes is we'll be sharing the presentation slides after this session, and we'll stop for questions throughout the conversation, or you can use the chat function at any time to ask us any questions. My colleague Michelle is here helping navigate those questions. And also you can raise your hand. There's a little hand button if you have any questions that you want to bring up and share verbally. Our Twitter handles are Canadian Women's Foundation listed there, and Innoweave. And we will be recording this session so that we can share it subsequently, so please keep that in mind. So just to get us kick-started, my name is Annelies. I'm a project consultant with Canadian Women's Foundation, helping launch the Investment Readiness Program. Hail from Vancouver, but I'm actually today in Toronto at the Canadian Women's Foundation office, so it's exciting to be here for the first time with the team. And then we have Wayne Miranda. Wayne, do you want to introduce yourself?
Sure. Hello, everyone. It's a pleasure to be here. My name is Wayne Miranda. I'm the Investment Readiness Program Lead at McConnell Foundation, and you'll hear from me shortly. Welcome.
Yeah, and a big thanks to Wayne and McConnell and the Innoweave for co-leading this webinar for us. So it's great to have that partnership and to be able to gain the insights and resources that they have to support applicants for the Canadian Women's Foundation granting. So before we get started, of course, we want to acknowledge the territory upon which we stand. So we all across what is now called Canada live on traditional, ancestral, and often unceded territory. So I live in the land of the Musqueam, Squamish, and Tsleil-Waututh nations, but we really want to recognize the role that all of these nations have and continue to play in stewarding this land and supporting everyone here to thrive and the land to thrive. So we really want to respect that role and respect what's needed in terms of improved relations as a community, and specifically also wanting to recognize the ongoing violence towards Indigenous women that does constitute genocide, as stated in the report on the inquiry of missing and murdered Indigenous women. So a lot of negative effects that have taken place, but we're really working as an organization and as a nation to improve these relationships. So grateful to be on these territories. Okay, so our session today starts with introductions that we've already somewhat gone through, and thank you to all of you for sharing your introductions as well. If you're just joining us, you can type your name, organization, and where you're calling in from in the chat box. We're going to talk about the social finance opportunity, which is sort of the bigger piece that the Investment Readiness Program is leading towards. But we also are going to talk about becoming investment ready, the Canadian Women's Foundation grant process, and the Investment Readiness Program in particular, and then we'll have space for discussion and questions at the end. But as mentioned, we'll have time for Q&A throughout as well. So just briefly on the Canadian Women's Foundation, I know many of the organizations that are joining us today are already familiar with the foundation, which is amazing. We've been around since 1991. Focusing on women and girls, as well as those who identify as women and girls in Canada. And there's been an investment of over $90 million in 1,900 programs and communities. The areas that we focus on primarily are preventing gender-based violence, alleviating poverty and supporting women's economic development, promoting inclusive leadership, and championing girls' empowerment. And we're really grateful to be part of this Investment Readiness Program as one of the readiness support partners. Recently, the organization also set out some strategic priorities. These include attracting and inspiring philanthropists philanthropy, investing in women and girls, building capacity, advocating and mobilizing for change, amplifying national conversation through thought leadership. So many of these are existing priorities that the Canadian Women's Foundation already had, and so it's just building upon those and expanding and advocating and mobilizing for change, as well as amplifying national conversations, are some of the kind of added pieces that we're working together as a foundation. Now I'd like to introduce Innoweave again, so I'll pass it back over to Wayne.
Thanks so much, Annelies. So many of you are likely familiar with Innoweave, but for those who aren't, I'll just give a brief overview. Innoweave is an initiative, a program of the McConnell Foundation. The McConnell Foundation is an 80-year-old foundation with a focus specifically on social innovation across Canada. So with programs in youth and adult mental health, in Indigenous issues and reconciliation, in education, in the transition to a low-carbon economy, and so forth. Innoweave came out of this work recognizing that a lot of community organizations do require capacity strengthening and sort of the adoption of new social enterprise or new social innovation approaches. And so for the last 7 years or so, we've worked with about over thousands of organizations, 500 of which have gone on to access funding to adopt a new social innovation approach to enhance their impact. And today we're just going to zoom in on one of those social innovation approaches, that being social finance. And so just for a reminder, in case you had not had the opportunity to visit the webinar number 1, I'll just go through what social finance is. And so social finance, there's really 2 key points that I want to emphasize. There are many definitions of what social finance is and what it seeks to achieve, but the 2 key tenets that I'd like to emphasize here is that it is repayable investment. And so that differs from grants or other earned income where you may not need to repay that. So social finance is investment that is repayable, and that investment seeks a social, environmental, and/or cultural impact at the end of the day. And so we'll use this definition as a foundation to introduce these 2 new programs that are coming down. So the first is the Social Finance Fund, which is an initiative of the federal government, in this case, Employment and Social Development Canada. The ultimate aim is to create a vibrant social finance market, increase the amount of affordable capital towards organizations with a social, environmental, cultural mission. It's a $755 million commitment from the federal government, and they expect that those funds will be matched by the private sector. So for every $1 of public investment, they expect $2 of private investment from foundations, from high net worth individuals, from other private actors, perhaps pension funds, perhaps insurance companies. Ultimately, it's a $2 billion opportunity over the next 10 years. And if you are a nonprofit, a charity, a social enterprise for-profit, a cooperative, hybrids of all of the above, you would be eligible to access this repayable capital. The way in which you would access that is through social finance investors by means of a loan or equity shares or revenue share agreements, and we'll get into some of that language very shortly. And we expect this is affordable capital that you can access. So, expect that it would be below market rate interest rates the interest rate would be below market rate, or the return that you would need to deliver to the investor at the end of the day would be below market rate. So this is the Repayable Capital Initiative. Sitting alongside the Social Finance Fund is a program that recognizes many organizations are not quite investment ready yet. And the purpose of this next program, the Investment Readiness Program, is to really strengthen those organizations to participate and use social finance to enhance your impact. So this is a $50 million grant program. So this is non-repayable. It sits alongside the Social Finance Fund, so just note the difference. Organizations have roughly 2 years to access these funds. So most of the granting partners are going until about March 2021. Again, if you are a nonprofit, a charity, a social enterprise for-profit, a cooperative, or a hybrid structure, you would be eligible to access these grants. Typically, the purpose of them is one-time expenses to become investment ready. So it's to purchase services or to access resources to become investment ready, to position your organization for social finance. It would not be for ongoing core operating expenses that would just keep your organization afloat, for instance. And the way the funding will flow is through various funding partners or readiness support partners, as they would be called. So community foundations is one. You're on the line with a major one, the Canadian Women's Foundation. In Quebec, it would be Chantier. And for Indigenous-led organizations, it would be the National Aboriginal Corporations, Capital Corporations Association, and then the National Aboriginal Friendship Centers, or National Association of Friendship Centers. Sorry, I'm mistaking those acronyms. So this is the Investment Readiness Program at a glance. So we can go to the next slide. What I want to get into, that was a brief overview of what we did last webinar. But this webinar, what I want to get into now is how do you become investment ready? How do you think about that journey? What's kind of important considerations in that? And hopefully it raises new questions for yourselves. Potentially you identify some gaps that you might need to think about. And these questions and these gaps can be addressed through the Investment Readiness Program. So if you need a coach, if you need a consultant, if you need services that can help you answer those questions or fill those gaps, the Investment Readiness Program is for you. And once I pass it off back to Annelies, she can take you through exactly what that granting process looks like. So similar to, for instance, when you're trying to access social finance in this case, an analogy might be if you've ever walked into a bank or a credit union looking for a mortgage. Certainly that banker or the credit union representative would be interested in the house or the building that you're looking towards buying. And you can go at length and talk to them about the kitchen and or how many bedrooms or what the backyard might look like, or various other elements of the house. But certainly a key consideration and a key conversation that you would be having is about investment repayment. And so I want to start with investment repayment and start helping you work the journey backwards from there. So social finance is repayable capital that seeks a positive impact, and the investment repayment is this key consideration. And there's kind of three models that you can think through for how investment repayment can work out in time. So the first model at the top left hand of your screen here is fixed recurring payments. So you might receive capital all at once, and you can use that towards your activities, and then you may need to pay regular fixed payments of principal and interest over time. And typically you can see relative to the other graphs, it might be low payments, but recurring over time and for a period of time. Conversely, if you think about the top right-hand model, this lump sum repayment model, where you've received the investment up front on say day 0, and sometime in future, maybe 1 year or 2 years or 3 years in future, you would pay that all in a lump sum. This may or may not have some nuance to it. So perhaps this lump sum is only the principal component. So maybe all along you're paying very small levels of interest to keep the interest payments going, and the principal remains the same. And then at the end of your loan or at the end of the term, you would pay that principal all at once. And conversely, these top two to the bottom left of your screen, there's the variable payments model. So this perhaps could be a percentage of income that you are earning or a percentage of the savings that you are generating. So perhaps it could be quarterly payments or monthly payments. And it would vary upon the income or some other factor that goes into your repayment consideration. So two things to think about as you try to determine which model is appropriate for your organization. Think about, the longer the time passes before investors are totally repaid, the greater the cost of financing that you would incur. And similarly, the greater uncertainty each payment has, the greater the cost of financing would be for your organization. So you can see relatively, I tried to show, I guess stylistically, the lump sum payment, if you add up all the fixed recurring payments and compare it to the lump sum would be more expensive. And similarly, because the variable payments are uncertain month by month or uncertain quarter by quarter, you might end up at the end of the day paying a little bit more than a fixed recurring payment. So then, of course, the question is, why would I ever not do fixed recurring payments? And that it's totally dependent upon the way in which you are earning revenue or the way in which you are generating savings in your social finance project. So key considerations, which investment model works for you, and which savings or which revenue statement or means are you using to generate that. So there's many different types of social finance and many types of instruments or many types of forms that you would discuss perhaps with an investor. And it's similarly, it really depends on what activities you're seeking investment for, what revenue source you might be using in order to repay the investment, and what's potentially saving source you're using to repay the investment. So I won't go item by item here. I just want to highlight a few that I think you should have perhaps in the top of your mind. And towards the end or after this in a follow-up email, I'm happy to share with you a handout that you can use, and you can use that as an ongoing reference. So you can have this type of information at your fingertips. So the first that I want to emphasize here is asset financing, for instance. So it's in the middle here under loans. Asset financing is when you want to purchase an asset, perhaps like a building or a distribution van for a social enterprise. And often the loan would cover about 75% of the value of that asset. And so you would either need to come up with the 25% or think about another way of financing the rest of the purchase. A term loan is relatively similar, but it's not necessarily about, or it's not exclusively about purchasing an asset like a building or a van or a piece of equipment. So a term loan helps fund specific projects over, as the term describes, over a period of time. It would have a set repayment schedule, and it would come with principal and interest payments. And often collateral is required. So in the case of asset financing, most often the asset itself is the security or is the collateral that you would need to pledge or offer, meaning that if you were to, in the unlikely case, not be able to repay your loan or not be able to repay your investment, the investor has the right then to sort of seize that asset and sell it to recoup their investment. And so similarly with a term loan, because you're not necessarily purchasing an asset or purchasing equipment that could serve as that collateral or serve as that security, you might need to pledge other assets that your organization has, be it a building or a guarantee that you could have. And so have that consideration in mind as you think about what instrument is right for you. Conversely,
Wayne,
go ahead.
I'll just jump in with a question that you can address whenever you feel ready to, but there's a question, what are the main differences between social financing and social impact bonds?
Perfect. I'll definitely come back to that. So just give me a moment, Tara. So when I think about working capital loans, working capital is operating money that you might need to cover salaries or office expenses or transportation or programmatic expenses. And this may or may not come with the need for collateral. If you can access working capital loans without collateral, it's likely that you have to have a strong track record of recurring revenue or predictable revenue or predictable savings being generated so that the investor is comfortable and confident that the loan would get repaid because there is no security or there's no collateral offered. And the last one that I'll just highlight here is the line of credit. The simple way of thinking about a line of credit is how a credit card operates. So it would be a maximum amount that an investor offers you. It's not necessarily cash that you would have on hand up front, but you could go over, say, and go into a negative balance, quote unquote, in your bank account and use that line of credit. Sorry, I'm getting a phone call. And so you can go over your negative balance in a bank account, or you'd have a line of credit, sort of account in your bank, and you could use that as and when you need it. So if 1 month you just need to make payroll for that month, but you have secured pledges, or you have a secured contract the next month, a line of credit might be an appropriate tool for you to use and just smoothen out your expenses and your revenues. So that's a lot of sort of investment jargon, and some of this content will be here. Just know that these are some things that you might want to have in mind. And there's coaches, there's consultants, there are lots of service organizations that can help you figure out which is most appropriate for you. So to the question about, what's the difference between social finance and social impact bonds? I would say a social impact bond is just one type of social finance. So social finance you can think of as the umbrella sort of taxonomy. A term loan that seeks a social or environmental or cultural impact is one form of social finance. Similarly, an impact bond, where an impact bond is basically a three-party agreement where an agency or an organization seeks to run its activities that would have an impact. They raise the initial funding to roll out those activities from an investor who takes the initial risk to put in that capital. And the investor gets repaid not necessarily through revenue savings generated by the organization, but by a third-party organization that has a vested interest in the outcomes that are achieved through the bond. And that third-party organization, most often the government, though not exclusively the government, would pay back the investors. So a social impact bond is just one type of social finance. So we can proceed onwards to the next slide. So those were some types of social finance that you might want to consider. Now, how do you get ready to actually access those types of social finance? And one thing to remember is that there isn't necessarily a checklist, or there isn't a recipe for how to become investment ready. There are just some ingredients that you need to consider and know what is appropriate for any given investor. So it differs by the type of finance that you're accessing, and it might differ by the investor that you're working with. So some things that are probably common. Investors really care about the team. They care about the strength of the team, the character of the team, the track record, the governance model that you're using, be it a board or any other model committee. So really consider the skills, the aptitudes, the experience that you can showcase or demonstrate on your team. Similarly, once you've got a team and you've got sort of quote unquote the right people on the bus, think about the strategy and plan and how you can demonstrate a cohesive and a comprehensive plan as to how you're going about your activities, what outcomes those activities will achieve at the end of the day, and what impact those outcomes will have. And the how is the strategy. So maybe you've defined what you'd like to do and how you'd like to go about it, and really showcasing the strategy. Think about the risks that might come about in that strategy and how you might mitigate those risks. What might go wrong, and how are you going to come up with a plan B or a plan C to figure out to still achieve those outcomes. Of course, social finance differs from just regular regular finance because it cares a lot about the impact, be that social, environmental, or cultural. And so really outlining the theory of change, for instance, or your impact model, how you go from activities and inputs to outputs to outcomes to impact. So outlining that and being able to articulate that and defend it in a way is really important to a social finance investor. This is finance at the end of the day, so really understanding your cost structure, what expenses you can imagine incurring now and into the future, what revenues or what savings that will generate. So how that works in a conservative case, how that might look in an aggressive case, and how that might look in a most likely case, and mapping that out over time. Mapping how the investment repayment would look over time. And so having a very clear and articulated financial model is a key ingredient to investment readiness. And then knowing who and when to approach investors, understanding what they look for, understanding sort of what their process is. So they often would go through a due diligence process, and so that might look like interviews with your team and trying to deep dive into your strategy or deep dive into your impact model. They might very likely go through and build out their own financial model, sitting alongside yours and try to validate some of your assumptions, and you can think of being prepared for that and packaging yourself for that well, and that being a key ingredient for investment readiness. And so if we go to the next slide, these are some of the things that you might consider when you consider having ready for your package, if you will. And investors might ask about all these 4 different buckets of things. So they might ask you for a strategy or a business plan. They may ask you for an annual report or organizational brochure, resumes about your key staff, management, your board. They might ask you for your incorporation documents or your registration documents. They may ask you for letters of support from beneficiaries, from stakeholders, from other funders, be those grant donors or investors. So they will ask you about your organization and sort of what you're about. If you happen to be going to access asset financing, so you're looking to purchase a building or you're looking to purchase a piece of equipment, they may need the description of that asset. They may need the budget around that sort of project, so vendor quotes for the purchase, for the construction or renovation of that asset, the ongoing maintenance that asset may require. They may need copies of the contracts. So if you have an agreement with an architect or you have an agreement with a maintenance firm or an engineering firm, they may want to look at those. And given that it's an asset and it is likely a long-term investment, they may ask you for insurance for that asset. So that's specific to asset financing. Common to all would be the financial information. So they may ask you for your organizational audited financials, so an income statement, a balance sheet, a cash flow statement. Typically, if you don't have audited accounts, they would certainly want the reports that you'd send to your board, for instance. So we understand not every organization is to the strength of having an audited account, so investors might make concessions there. They would look at your existing debt and any loans or investments that you have presently, as well as your history. So if you've got a track record of taking a loan and paying it back, obviously that is a confidence builder. They would look at your existing and past cash flows. So what your revenues and what your income has been, what your expenses have been. They would look at your major funders or your major donors. And they would look at your future contracts, your future pledges, your future income in both a conservative, realistic, and aggressive sort of scenarios. And then, of course, they care about the impact. So they might ask specific metrics that you're looking to measure in a quantitative way, or stories that you're looking to develop in a qualitative way. They may ask for something called like a theory of change or logic model. So the idea of what inputs and activities you're going to do through to outputs, outcomes, and impact, and what that measurement approach is, how you're going about understanding what impact you are having. And increasingly so, there's alignment around the Sustainable Development Goals, which are 17 goals that the world have sort of to. I've heard one person sort of, I guess, amiably refer to it as the world's to-do list. So they might look to what is your contribution to the SDGs. And something to note is, again, this isn't everything that you need. It's trying to be a list of things that you might want to consider. It might help you identify gaps or questions that you might have for your organization as to what you might need to work on to become investment ready. But just note again that every investor is slightly different. Their process might be slightly different. And so not all of these are required. Don't think of it as a checklist. Think of it as things that you might want to ask about if you do require. So I think that will be the last slide, unless if we go forward. Oh, actually, I do have one more. If we can just proceed to the next slide. Something to note as well is, great. We've talked a lot about what investors look for, but I think it's really important for you as well to consider what you should look for in an investor. And a key consideration there is don't just think about the money that would come through from the investment. Look for a real partner. And some dimensions that you can think about there is, what else has this investor invested in? Look through their portfolio, see if there's anything relevant to your organization. See if there are like-minded organizations or organizations that share your values, and that would give you an indication of the relationship that you can imagine having with this investor over time. Think about their value add. What other services or benefits do they offer aside or on top of money? Might they offer a role in your organization, be it a board seat or support and coaching for management, or even some of the nitty-gritty of your organization? Maybe they have expertise in your domain, or maybe they have resources that they could link you to. And think about the network. Who else do they know? Who else do they work? Do they collaborate with? Who could they introduce you to? And how might that enhance your impact as well? So yes, think about the money that you can gain, but also think about some of these dimensions and others as to what you should look for and how you might vet your investor. So I think that is all for me. Let me see if there's any questions, but we can open up for discussion here.
Thanks so much, Wayne. Yeah, so if anyone has questions, please feel free to put them in the chat box or also to raise their hand. We'll also have time for questions at the end. Seeing one question come up. How does this differ from trying to get a loan from a bank?
Yeah, great question. I think the key difference is that a social finance investor is also looking for a social, environmental, or cultural impact at the end of the day. So it wouldn't just be about the finances, although that is a key consideration. And as you've noticed, I've emphasized some of that, but they very much care about the impact. So if we go back a couple slides, it's things like your contribution to the SDGs, or it would be an articulation of your theory of change or your impact model, so or the metrics that you're looking to measure. So that would be a key thing to think about as you're going to a social finance investor.
Thanks, Wayne. And I'm seeing another one here. How do nonprofits find investors? Is there a public list, or do we find them on our own?
Yeah, great question. Very shortly, I think in the next month or so, we are expecting the lead organization in the Investment Readiness Program, that being Community Foundations of Canada, to launch a website. And the expectation is that that website can have a database, or at least highlight some of those investors. And I can name a few of them here: Community Forward Fund, New Markets Fund, Renewal. There's many in Quebec, Risk. Yeah, I'm blanking right now, surprisingly, but there are very many. There's I think 15 or 20 or so at least that I know of. So look forward to that list. And if you ever do have questions about which investor is right for me, part of the Investment Readiness Program is to help you link to a coach or to a consultant to help you answer that question. So there is support available in the program for you to answer that.
Thanks, Wayne. And from Julia, we have, do we know yet how the ecosystem will differentiate for-profit and not-for-profit or charitable ventures?
Yeah, actually, Annelies, might you want to take that question? Or how it
Sure.
relates to the Canadian Women's Foundation?
Yeah, so we'll go into the granting criteria subsequently. The Canadian Women's Foundation is only able to fund registered charities or qualified donees. And so some of the other partners will be able to directly fund for-profits, but the Canadian Women's Foundation will not. However, you are able to partner with a registered charity or a qualified donee in order to apply for funding through the Canadian Women's Foundation. But if you are not able to do that, you can apply to one of the other partners, the readiness support partners that I'll be talking about shortly.
Yeah, go ahead, sorry.
Go ahead.
Okay, I see a question about who are the social finance investors in Atlantic Canada. Off the top of my head, I know of a few. I think it's called Community Economic Development Investment Funds, so CEDIFs. And so there are that fund structure that exists to invest in social purpose organizations in Atlantic Canada.
Great, and then I see organizations that get project funds and no core funding. What kind of assets can they offer?
Yeah, great.
Go ahead.
So for various organizations, depending on the type of social finance that you need, you may not need to, okay, maybe my interpretation of this, and just please correct me if I'm interpreting it wrong, is what type of collateral might I need to access the social finance, given that maybe I don't have core funding or I don't have project funds. So if I've misinterpreted that question, just please correct me. So you might not need collateral because you might be just going for a working capital loan and you've got a track record of taking something like this and repaying it, or you've got predictable revenues that a social financer can take confidence in. So depending on the type of social finance need, collateral is or is not an issue. If you do need collateral to have predictable revenues, you might need to consider something like a guarantee. So there are organizations that can offer guarantees. None are coming to mind right now, but I can, after this, create that list, or there's a database of social finance investors that I will refer to.
Great. The next couple of questions are about the Canadian Women's Foundation grants, so I figure I will just start jumping into that section and aim to address those questions, and if I don't, I will come back to them. So thank you again, Wayne, for that segment of the presentation. This is also your slide, Wayne, but I'm happy to speak to it. Did you want to jump in, Wayne, or do you want me to talk about it?
Sure, I can quickly go through it. So maybe just to summarize what you can use the Investment Readiness Program to do. There's various different stages that an organization might come to the Investment Readiness Program, or where you're starting from. And the program is meant to meet you for where you are at. So perhaps you are just learning about social finance and you're looking to generate ideas, and there are partners that can help you do that. If you're looking to clarify an existing concept that you have and you need to flesh out some of those details, like understand the assumptions or understand open questions, understand investment readiness needs that you might have about implementing or executing on that project concept, there are supports available for that. If you're further along and you've got your project idea, you know exactly what you want to implement, but there's still some questions or things that you want to do to strengthen the investment case. So maybe that's a market study to verify or validate that there are customers for a particular social enterprise idea that you have. Or maybe it's a feasibility study for an idea that you want to try to implement. It might be strengthening your business plan process, or doing the financials, getting your financial model intact. It may be accessing legal advisory to think about compliance or to think about structure of your organization. It could be developing new systems or processes to kind of have the internal know-how and setup for your organization to execute well. Or it might be improving products and services that you already have, but now you're seeking to deliver that in a new geography or to meet new beneficiaries or customers. So that would be strengthening your investment case. And if you're well past that and you're really looking to
most of them, and as I said, we'll jump back to them if we do not. We are one of the 5 partners. So as Wayne mentioned, there is Canadian Women's Foundation, Community Foundations of Canada, Chantier de l'économie sociale, and we have a French webinar in a few hours if you're interested to join for that. NACA and NAFC. We have been given funding to support social purpose organizations to help move them closer towards investment readiness. So the ESDC has set out an investment readiness continuum from early stage innovation all the way to investment readiness. And we will support organizations at any stage along this investment readiness continuum. So we're not prioritizing organizations that are further along nor that are earlier. Our main goal is to help move organizations along this continuum. And that's the same goal for all 5 of the readiness support partners. And so the way that the funding works is that you apply to one of those 5 organizations and you're pitching to us how this project that you're applying for will advance your investment readiness. And so somebody asked whether you have to do the work in-house or not. The expectation is actually that you would access services and supports to help you get investment ready. You can plan to do it in-house, but we do have this list of service providers, and there are many other service providers out there that you can access supports from. So you can purchase supports or services from any service provider. We do have this list generated by ESDC of organizations that they're funding. But that's not to indicate that they are any better fit than any of the other service providers that you might know of. So we really want you to find one that works best for you and find a good fit for what's needed to help advance you along the investment readiness continuum. I've shared sort of 2 of the 3 partners thus far. So the readiness support partners are these 5 partners that we've mentioned, expert service providers, some of which have been identified by ESDC, but others that you may know of that you can access services and supports from. And the last is ecosystem mobilization initiatives. And so these are initiatives trying to advance the overall social innovation and social finance ecosystems, one of which is developing better evaluation practices, because it's hard to measure the impact of these initiatives because, measuring social impact is a lot harder than measuring just financial impact. So these are the broader sort of partners that come together on the Investment Readiness Program. And now just to talk about the Canadian Women's Foundation's granting process. So we have 3 cycles of funding. So we're right now in what we're calling the fast track, because we are setting up and launching this in a bit more expedited fashion. So in the subsequent 2 sections, we aim to provide more support to grantees as well as longer time frames for applications. So right now we're open for 4 weeks, so we're closing on October 18th. But the subsequent ones will be open for 6 weeks, and we'll also be doing capacity building and support to help people get ready to apply for these grants in February and September of 2020. It's a single-stage funding application using an online system. I'm hopeful that many of you have already signed up and have started your applications. We're hoping to give approximately 20 grants of up to $50,000 each, and the funding will be dispersed in January of 2020. We prioritize inclusion and addressing barriers to access. We are funding not only women and girls, but trans, two-spirit, and non-binary peoples who face multiple challenges. And in addition, we're really trying to work with communities that have faced specific violence and exclusion, including First Nations, Métis, and Inuit women, girls, trans, two-spirit, and non-binary people, Black women, and you can follow that list as well, those living with disabilities, and those two-spirit, lesbian, gay, bisexual, trans, queer, questioning, intersex, pansexual, androgynous, and asexual peoples. So we have a very inclusive funding process, and we actually have an advisory committee that is quite diverse and is going to be seeking this as a key consideration when funding to make sure that we're funding a diversity of grantees. So to submit your application, You're going to need to submit information about your organization, so name, charitable number, or qualified donee status, or the partner that you're applying with and their charitable number or qualified donee status. If you have a nonprofit business number, please include that. Contact information, mission, budget, etc. Then we want to hear a bit about the initiative that you are starting or already have started that you need to access support to advance along the investment readiness continuum. We really want to hear which individuals and communities are served, and especially if there's any of those mentioned on the previous slide, more marginalized populations, and how you're supporting them, and the total amount of funding that you're requesting from the Canadian Women's Foundation. And then we also have proposal-specific questions that detail all of the questions specific to the Investment Readiness Program, and that includes the description of your purpose, activities, and approach for this initiative, as well as key partnerships that you are leveraging for this, and specifically what supports are you accessing in order to get closer to investment readiness. We're also requesting a number of attachments, so activity outline, board list, band council list, audited financial statements, annual report, policy on diversity and anti-racism, letters of support. Many of these are listed as if applicable. We know that organizations are at different stages of development, so we don't want to exclude those that are at earlier stages and might not have audited financial statements, for example. So please reach out if you have questions about that, but they're also not required documents in our submission. I'm blazing through this because I see a number of questions and I want to make sure we get time for this. So these slides will be available afterwards. You can view the granting criteria online, but we want to make sure you have clarity on your initiative, that there is feasibility or viability on it, that you can demonstrate a need for this initiative and a fit between the need and your design, as well as a strong business model. And then, as Wayne is talking about, what impact do you aim to achieve, both on social and environmental challenges, as well as on women and other marginalized groups, as listed previously. We're curious why you think this is a key unlocking moment for your initiative to receive funding. So why right now should we be funding this initiative? How will this funding have impact on your broader organization? So how might we support your broader organization through this funding? And then, is there backing or traction for your idea and initiative in other ways, either through funding or support? And how can you demonstrate that? As I mentioned, looking at the organization, so strong organization, strong team, openness to participate in monitoring and evaluation, but then we're also open to working with new or emerging groups, and in that case, we'd be looking for partnerships and community buy-in, as well as someone or a small team who has a real commitment and time and energy to this project. Lastly, looking for alignment with the Investment Readiness Program objectives and targeting marginalized populations. Here's a brief list on what the foundation doesn't fund. So as we mentioned previously, we are not able to fund solely profit-based organizations, but if you're in partnership with a registered charity or a qualified donee, we would be able to fund you. And it is Canada focused and not for individuals. There are lots of resources and documents online, so I just wanted to share this. This is a detailed document that shows the questions as well as the guidance on answers and how to submit a really strong application, and word limits as well. We also have a frequently asked questions document, and we have a detailed criteria document as well. Okay, so I'm going to pop into the questions and see which I was able to capture and which I might have missed. So I'll start from the bottom. Do not-for-profits need to apply with a charitable partner? Yes, so it needs to be someone with a registered charitable number or qualified donee status. And then, can an organization apply to the next cycle if rejected in the first? Yeah, for sure. Both if you're rejected and also if you're accepted, you're able to apply for subsequent rounds. The key is, though, that if you're successful in applying for a subsequent round, you need to show how these funds will advance you in a different way along the investment readiness continuum. And so it can't be for the exact same piece of work, but you can apply multiple times, and definitely if you are not successful. If you're not successful, we encourage you to reach out and get some feedback on why you might not have been successful to make your second application even stronger. Okay, and I see that Wayne has answered a few of the questions, so that's great. Yeah, I think we answered many of these. And I don't know if I mentioned it, but you are able to apply for funding from the different partners. So you could technically apply to funding from 3 or 4 of the different partner organizations. There's quite specific criteria. National Association of Friendship Centers, you can only apply if you are a friendship center. NACA, you can only apply if you're an AFI, and so there are restrictions there. For Chantier, you can only apply if you are in Quebec. But you presumably could apply to a few different partners. You can only gain funding from one partner for one body of work, so no double dipping on that front, but we will be sort of checking grantee lists. But if you're applying for a different service or support that will move you along the investment readiness continuum from a different partner, that's A-OK as well. We don't have deadlines for the other rounds yet, the ones that will happen in the spring and the fall of 2020, but those should be communicated shortly. But in the same way that so this time around we had 4 weeks of opening, there we'll have 6 weeks, so you can get a rough estimate. For launching in February and September, the deadlines should be in March and October for those. April and November for those subsequent rounds in 2020. So yeah, I heard if we have a proposal submit through the Canadian Women's Foundation, are we eligible to apply through CFP? And yeah, as I mentioned, you are. If an organization is in Quebec, must we apply through Chantier? No, if you're in Quebec, you can apply anywhere, but you're outside of Quebec, you cannot apply through Chantier. Is there a clear list on the Investment Readiness Program, goals, priorities, and objectives? Yeah, you should be able to find those on the ESTC's website. And then, as Wayne mentioned, CFC is also creating an overall website for the Investment Readiness Program that will capture all the different organizations that are associated and key program objectives, etc. Okay, we're blazing through this. We've got 3 minutes left if there's any last questions, but before we do end, I also wanted to give a big thank you to Innoweave and to Wayne for preparing slides for this webinar, and then also to the Government of Canada for the funding to achieve these outcomes with the Investment Readiness Program. Someone is saying, would you be able to show the granting criteria slide again? Yeah, for sure. And as mentioned, these are all online on our website, so you should be able to find all of these in the attached documents on the Canadian Women's Foundation website. We have one more webinar coming up. It's next week on October 8th. It is a Q&A only, so it will be way less structured and there'll be way more time for questions and engagement. So I encourage you to come to that as well. And then if you have more questions, you can reach out to either Wayne or myself. So Annelies, I'm at socialinnovation@canadianwomen.org, and you see Wayne's email there, socialfinance@innoweave.ca. I think we will call that a day. Thank you so much to everyone for joining, and thank you again, Wayne. And we look forward to receiving your applications. And if you have more questions, please reach out.
Our pleasure. And maybe we can just paste the the link on Canadian Women Foundation's website for all of that further information. Just trying to grab it.
Yeah, and we'll be also, as mentioned, sending out slides after
Okay.
the webinar so that you have access to that, and then there'll be a recorded version as well for anybody who missed out. Okay, take care all, and thank you so much for joining. Bye-bye.